welcome back to the Deep Dive. If you're watching the markets, well, you know what kind of day it's been. Everyone's looking for that Bitcoin update each morning. And today. Well, today's different. We've got a deep dive that's really digging into some powerful shifts. Bitcoin isn't just, ticking up. It feels like it's making a statement. We're seeing this convergence, right? Macro stuff, big regulatory news, and the network fundamentals just looking stronger than ever.
Yeah.
So our goal today is simple. Cut through the noise, explain what just happened, why it matters, and, what it could mean for you. Okay, let's unpack this.
What's fascinating here is it's not just the usual market chalk, not noise. It really feels like a convergence of these different factors: economic, regulatory, technical.
Right.
And they're all pointing towards what might be the next major directional move for the whole market. The last day or two have been genuinely significant, I think, setting a new stage.
Absolutely. So let's jump right into that immediate impact. The price action, pretty eye-catching. After weeks of what felt like, fragile consolidation, a tense equilibrium, Bitcoin just smashed past $114,000.
Decisively.
Yeah, like a 2.4% jump yesterday, trading around $114,200 now. That's more than just a gain, isn't it? It feels like conviction building about maybe looser financial conditions coming.
Exactly. And that conviction, it ties directly back to a key catalyst, that softer than expected U.S. inflation data we got yesterday.
The PPI report?
PPI report, yeah. August Producer Price Index. Economists were looking for, a 0.3% increase?
Yeah.
And it actually fell 0.1% annually. It's up 2.6%, but that's way below the 3.3% expected.
Big miss.
Huge miss. And the market, well, it didn't waste any time. It basically saw this as a green light for the Fed, thinking rate cuts next week.
The probability surged, right?
Oh, yeah. Jumped over 93% for a 25 basis point cut, a quarter point reduction. And remember, we also had those downward revisions to U.S. job numbers earlier in the week.
Right, stacking up.
It all points the same way. So for you listening, the takeaway is cooling inflation, maybe a softening job market, that generally makes risk assets like Bitcoin look more appealing. Cheaper money potentially on the way. Now, obviously, everyone's waiting on the CPI data this morning. Consumer prices, that's the last big piece for the Fed before their meeting, could definitely inject some volatility.
It's amazing how fast that macro picture can change, isn't it?
Yeah.
But what's also interesting is you mentioned the technicals, where there's signals building up, things happening sort of beneath the surface.
Yes, absolutely. Two things really stand out on the charts. First, we just got a MACD golden cross for Bitcoin in the last 24 hours.
Okay, explain that quickly.
So basically, it's when a faster moving average line crosses above a slower one. It's often seen as a pretty strong bullish momentum signal.
It's significant because?
Well, it's the first one since April. And the last time we saw this, Bitcoin jumped over 40% in the next month. Some analysts are now even projecting, potentially $160,000 by October based on that historical pattern.
Wow. Okay. And the second thing?
Bollinger Bands. They reach their most extreme level of compression. Think of it like a spring coiling tighter and tighter.
Low volatility.
Exactly.
Right.
Really low volatility. And historically, that kind of compression often comes right before a really explosive price move. So you've got this coiled spring situation right before the Fed decision potentially releases that energy.
So buildup of potential energy.
Precisely. And what we were seeing during this quiet period was a divergence. The short-term traders, the fast money, they were mostly waiting on the sidelines for the Fed. But the long-term holders, the miners, you could call them the smart money.
Yeah.
They were actually using that consolidation to accumulate more Bitcoin. Quietly buying, that's a classic sign of a healthy market, building a base.
That fast money versus smart money distinction is always so key. Okay, so the macro winds are shifting, the charts are flashing signals. What about trust? The regulatory side that traditional finance always worries about. Because there's been some huge news there too, right? Here's where it gets really interesting.
Oh, this is arguably a paradigm shift, truly. In just the last 24 hours, we've had some critical statements from top U.S. financial regulators. Huge clarity.
Like who? What did they say?
Well, Jonathan Gould, head of the OCC, that's the Office of the Comptroller of the Currency, they regulate banks, he stated, pretty unequivocally, that crypto activities for banks are legally permissible.
Legally permissible. That's big.
It is. And he went further. He condemned debanking crypto firms, said he wants to depoliticize banking, and the weaponization of the financial system. Strong words.
Wow. Okay. And the SEC.
Simultaneously, you have SEC Chair Paul Acton saying most tokens are not securities, and he voiced support for super app platforms,
Yep.
places where you could trade, lend, stake digital assets all in one spot.
So what's the real insight here? It's not just allowed, is it?
No, it's more than that. It feels like a strategic invitation. Top-down, ideological, and legal cover, really. It basically ends years of paralysis for conservative financial institutions. It gives them a government-backed blueprint for how to get involved.
And this follows that earlier news too, right? The SEC and CFTC joint statement.
Exactly. That was September 5th. They announced plans to harmonize crypto and traditional market rules, trying to end those old turf wars between agencies. So for you listening, that regulatory fog, the thing that kept so many big players out, it's finally starting to lift. It provides a much clearer path for them to engage without constantly looking over their shoulder.
That's a massive shift for the U.S. So
Yeah.
what does this mean globally? How does this U.S. pivot compare to, say, Europe or Asia? What's the dynamic now?
Well, it creates this really fascinating competitive global dynamic. The U.S. seems to be signaling, okay, let's integrate this through market forces with regulatory blessing. Meanwhile, you've got India leaning towards maybe limited oversight, focusing more on mitigating speculative risk.
Right.
And then there's the European Union, very methodically rolling out MiCA, their big markets in crypto assets regulation. Key deadlines are coming up in June 2025. That offers maximum legal certainty, but within a pretty defined, controlled box.
So different approaches.
Very different. The U.S. move feels like a strategic pivot from being, frankly, quite adversarial to now actively trying to foster domestic innovation. It's like a regulatory invitation. Build here, invest here. It dramatically lowers the political risk for big U.S. institutions.
And does this clarity help things beyond just Bitcoin itself?
Yes, crucially. They explicitly mention things like event contracts and perpetual contracts and decentralized finance protocols. That legitimizes the broader digital asset ecosystem, think smart contract platforms like Ethereum, in the eyes of institutional compliance teams.
Okay, so not just buying and holding Bitcoin.
Exactly. The real insight here is that this could accelerate diversification. Institutions might move beyond just passive Bitcoin holdings into more complex activities, like yield generation, across a wider range of digital assets.
That is a powerful signal for the whole space. Okay, so beyond policy shifts, let's talk about the money itself, the actual capital flows.
Yeah.
You mentioned that unseen tide of institutional and corporate buying.
Yeah, that corporate treasury revolution just keeps gaining steam. We're now over $113 billion in Bitcoin held on the balance sheets of more than 90 publicly traded companies.
$113 billion.
And it's growing. Just in the last 24 hours, Pop Culture Group, they're listed on NASDAQ, announced they bought 300 Bitcoin for about $33 million.
What's their angle?
They're building what they call a Web3 pan-entertainment super ecosystem. So this isn't just speculation for them. It highlights Bitcoin's dual role. Potential inflation hedge, yes, but also a catalyst for their long-term growth strategy. And what's crucial for you to understand is this represents a growing pool of, well, pretty price-insensitive demand. These are long-term strategic allocations. They're less likely to sell based on short-term market swings.
Right. And the pipes, the financial infrastructure to handle this institutional money, that's maturing too, isn't it?
Yeah.
Making access easier, more sophisticated.
Absolutely. Look at the spot Bitcoin ETFs. Phase 1 back in January was just about getting access, getting institutions in the door.
Yeah.
Now we're clearly in phase 2, optimization. You see these huge multi-billion-dollar flows moving out of higher fee products like GBTC and into lower fee ones like IBIT.
So they're acting like traditional allocators now.
Yeah.
Watching fees.
Exactly. They're applying standard financial diligence, scrutinizing expense ratios, looking at the issuer's reputation. It just shows Bitcoin is being integrated into normal institutional portfolio management. And the implication for you, this whole financialization process is creating more complex market structures. You've got direct spot holders, you've got ETF holders who are getting really sensitive about fees, and you have proxy equities like MicroStrategy.
Right, MSTR.
Yeah. So reading the market signals gets more nuanced. You know, if MSTR sells off, it doesn't automatically mean institutions are dumping Bitcoin itself. You have to look deeper now.
That's a really critical distinction for navigating this.
Okay.
But underneath all this market structure and regulatory change, you've got the bedrock, Bitcoin itself, the network. Let's unpack the health of the network.
Right. And the fundamentals there are, frankly, stronger than ever. Take hash rate. The total computing power securing the network, all-time highs. It's seen a staggering, 75% increase just year over year.
Wow.
And mining difficulty, which adjusts automatically, that's also at all-time highs.
Okay.
So why does this matter to you? It's profound, really. It means more and more real-world resources, energy, specialized hardware are being dedicated to securing Bitcoin.
Making it harder to attack.
Exponentially harder, more expensive, more difficult to attack. It just reinforces that core value proposition, immutable, secure store of value.
And what about the miners themselves? Their economics, their behavior.
That's another fascinating piece. The estimated average cost to mine one Bitcoin right now is around $99,100.
Close to the current price then.
Very close. Margins might be tight for some. But here's the crucial shift we're seeing in the on-chain data. Large-scale selling from miners. It's noticeably absent this cycle.
They're holding.
They're holding, strategically accumulating, in fact. Even with prices where they are, the decision to hold signals this powerful conviction that future prices will be significantly higher.
What gives them that confidence?
Well, a big part is likely the new persistent institutional demand coming from those spot ETFs. They see this steady buy pressure, it transforms them. They're not just raw commodity producers anymore, selling whatever they mine immediately. They're becoming more like strategic reserve asset managers, holding on to their Bitcoin. And that systematically pulls supply off the market, creating a potentially powerful supply squeeze dynamic down the road.
Interesting.
And that rising cost of production, that $99,100 figure, it's starting to establish what looks like a new and increasingly defensible price floor. It acts as a kind of psychological and economic anchor for the market.
That's a powerful dynamic, miners holding, costs rising. Okay, so looking beyond the core network itself, there's this whole other layer emerging, isn't there? The layer 2 ecosystem, Bitcoin DeFi. Here's where it gets really interesting for future growth.
Oh, absolutely explosive growth there. We're seeing reports suggesting like a 22-fold increase in the Bitcoin DeFi market size. A 2,000% surge in total value locked the amount of assets committed just by Q3 this year.
2,000%.
It's staggering. And it's not just abstract numbers. You see projects like Bitcoin Hype raising $15 million in a pre-sale, attracting big whale purchases. You see existing layer 2 tokens like Morel from Merlin Chain up 25% just this week.
So what does this mean for Bitcoin? What's the utility shift?
It means Bitcoin's usefulness is expanding way beyond just being a store of value or digital gold. These layer 2s are enabling smart contracts, decentralized applications, all built on top of Bitcoin.
Competing with other chains then?
In a way, yes. It's positioning Bitcoin to be a foundational layer for actual innovation and activity. Some people are calling it the great unbundling, basically, taking some of the value proposition that Ethereum has held for a long time, like smart contracts, and enabling similar things, but with the security of Bitcoin's base layer.
More utility, same security.
Exactly. It creates a whole new competitive landscape and, frankly, a massive new potential growth vector for Bitcoin itself.
Okay, so with all these pieces falling into place, macro, regulatory, network, layer 2s, what else is on the horizon? Any other potential catalysts bubbling up?
Yeah, the pipeline still looks pretty robust. Just in the last 24 hours on the geopolitical side, there are reports Russia is considering a state-backed crypto bank. Kyrgyzstan is apparently introducing legislation for a state crypto reserve.
More nation-state interest.
Seems like it, yeah. Often driven by that desire for monetary sovereignty, maybe moving away from the dollar system. And then on the tech side, kind of wild, researchers determined it's now theoretically possible to send Bitcoin transactions to and from Mars.
Mars?
Seriously.
Leveraging new interplanetary communication systems. Now, okay, it sounds like science fiction.
A little bit.
But it really just highlights how fundamentally robust the Bitcoin protocol is. Its potential maybe extends far beyond just Earth, eventually becoming a settlement layer for, well, anywhere. It just shows the potential keeps expanding.
What a briefing. Okay, let's try and pull this all together. Quick recap. The market's made a decisive move. Looks like it's driven by these big, dovish macro shifts. Huge news on the regulatory front in the U.S., a landmark change, really, significantly de-risking things for institutions. We're seeing that institutional and corporate adoption mature, getting more sophisticated, and all of this is sitting on top of Bitcoin's core network, which is fundamentally stronger than ever hash rate, miner conviction. Rock solid.
Right. And now this burgeoning layer 2 ecosystem is just exploding, adding massive new utility. It really feels like all these different threads are coming together, providing the fuel for Bitcoin's next big move.
It does. And, this raises an important question for you to think about looking forward.
Okay.
If the financial plumbing is really being laid now, if this great unbundling of digital asset functions is truly starting. How quickly might Bitcoin's core security, its unparalleled security, become the preferred foundation for a truly global, decentralized financial system, even for assets way beyond just cryptocurrencies? What could that really mean for traditional finance over, say, the next 5 or 10 years?
That is a profound thought to end on. Definitely something to keep watching. Thank you for joining us for this deep dive today. Keep exploring, stay informed out there, and we'll catch you next time.